Hi. So when you're buying a house and you go under contract, it feels a little like you're being shot out of a cannon. There are so many things coming at you that it's hard to figure out which you should focus on first. One of the things that we are suggesting that you don't wait on is homeowners insurance. This is Christine Atkinson with Columbine Mortgage, and this is your February timely topic where we're going to talk about some of the hidden costs of home ownership, that homeowners insurance. So unfortunately, in recent years, the cost of homeowners insurance and your ability to get it has really changed. There's been a number of things that have impacted this. We have had some recent wind hail events, particularly in Colorado, that have driven up those premiums. And then we all remember the fires, and those have really had an impact on what carriers are offering coverage and where. In addition to that, just as you know, inflation has happened and the cost of building and replacement has just gone up in the past few years. That is driving insurance premiums. And then frankly, there are some insurance carriers who just do not want to insure in Colorado. So they're either really jacking those premiums out, including existing policyholders, or just not offering coverage in certain areas of Colorado. And then another item is roof age. So it doesn't sound like this would be a big one, but if you have a roof on the new home that is older, so think 9 years or older, there are carriers that will not offer full replacement cost coverage of that. They do what's called actual cash value, and that is not accepted by Fannie Mae or Freddie Mac. So then you have to change insurance carriers. And then lastly, those condo and townhouses rely heavily on their master insurance policies. And those HOAs are really struggling with the increase in cost. And so sometimes are selecting coverages that are not acceptable to lender guidelines, which is a real bummer to find out halfway through the transaction. Why some of this matters is a full year of homeowners insurance is due at the time of close. So if that premium is super high, it is going to drive up your funds to close, which is not fun. It is also, of course, going to drive up your monthly payment, which not only having a higher monthly payment, but B, might lower your qualification if you're kind of riding the edge there in that. And then overall just is difficult to manage. You might not meet lender guidelines, just a struggle. So what can you do about this? As we said at the start here, just don't wait on this thing. It used to be just an easy, I'll go get insurance. I would suggest starting earlier on that. Definitely shopping around to multiple carriers, using an insurance broker to help with that. Then also bundling can work. So you've all heard about bundling, but it really can present some discounts for you. That does take extra time and some underwriting. So you want to leave extra time for that. And then of course, there are some discounts if you do manage to negotiate a new roof or some other items that really may be a big help. So it is worth a little time and effort to spend on this and to start early in the process. I hope you found this helpful, and just reach out if I can be of any help. Take care.